G'day everyone, welcome back to Pete's Investing. Today is June 10, 2023. This is the iron ore price update. We've got a neutral signal on our weekly, but we've got a bullish signal on our daily, so this could continue rising, in which case it'll pull up the weekly into a bullish scenario possibly if it continues. Let's look at each of these in separate charts. So we've got the weekly here. This is breaking up from after being bearish here, and it's currently in a neutral position. So we need to see it rise a lot more before it actually breaks into a bullish scenario. On the daily, you can see there it broke up a few days ago, and it's currently still rising, except with this one little minor bear candle at the moment. But going back as well, we do follow and track any divergence. You can see here there was a bearish divergence on the CCI versus a bullish divergence on the price chart. That's an early signal that we use to see if there's any going to be a change of direction, or at the very least a pullback. And here it actually changed direction. You can see here once it broke below that channel, of that divergence channel, our initial target area was hit and actually fell through that and below the 61%, which is always a key area to look out for. It came down as far as this key support at 657. So now we're seeing it rise again and with a new high being made. On the hourly chart, again zooming in, there was also a bullish divergence here. This is separate to the daily divergence. There was a bullish divergence here on the CCI, and there was a bearish divergence on the price chart. Again, we drew a channel. It broke above the channel. You would have entered long there, and it hit our initial target area of that 38% to the 50%. It actually may have just touched it there, so you might have missed it there, but then it fell off, hit the support level and bounced, and it hit the target area later. Now you could argue that was a failed divergence, because you can see there the CCI did fall off, so that technically that was a failed divergence, even though it actually did stay and hit our target eventually. Now we don't use stop losses. We prefer to use the average down approach, so that would have been another area you would have probably gone long had you traded that in accordance with the daily. At least you would have averaged down and gone long there, so double up your positions in line with the daily being in a long position. But again, you need to make sure you fall far enough to average down enough. You don't want to get too many trades entered until you see a good entry made. What I've got here as well is I've got a bearish divergence on the CCI, and that's continuing to the downside versus a bullish divergence on the price chart. And this looks like it's going to potentially play out. And what we look at here is we draw a channel between those highs, and you bring it down to the lowest candle in that range. And then we draw a Fibonacci retracement between that recent low to that high. So our initial target area, we take the closest Fibonacci range, which will be the 23 to the 38%. And if we're a bit more ambitious, we're going to go to the 50%. But let's aim for the 23 to the 38%. If it breaks below this channel, that'll be our initial target area. Also up here, we've got a back test going long and a back test going short. You can see there those entries. That was the only area made with the average down approach. If you're going short in that area, you can see there the price is going long, and you would have averaged down 3 times following that approach. And again, the way to avoid that, as I said, you always make sure you only trade long when the weekly and the daily are aligned. So you can see there during that period between November 22, so November 22, that was long on the weekly and long on the daily, and you would have taken those long trades during that period as well. So again, at the moment, primarily wait for the weekly and the daily to align before taking long entries. We use the divergence primarily to show a potential change of direction, not necessarily a trading activity, but more so a change of direction or a reversal slightly to the downside. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.